Alright guys, welcome back to Only Divergences. Thanks for joining me on this Sunday. In this video I will be updating my coverage of Apple. So let's take a look at the technicals to determine what we can reasonably say about this stock and its current technical structure and any potential. Subscribe to my channel if you want more. I post regular videos of the S&P 500 and on weekends I update individual stocks that I'm tracking. In my last video I quite clearly stated I was looking for a bottom at 135. We didn't get there, but we got to 138 three times. Now, my goal in my analysis is to be perfect. So I will not say that 138 is close enough because I didn't buy, and the purpose of the analysis is to be right and translate that accuracy into actionable processes and ultimately into profits. The only way to do that is to assess why previous analyses were not perfectly accurate and then reassess one's view and methodology. I hope that you can appreciate what I'm doing here in this video and why I do it. If you don't like this type of video because it's more reflective, feel free to downvote and let me know. But this is really for me to assess what I did wrong and why. And I do believe that engaging in this type of exercise is incredibly important for learning and growing and developing into a much more accurate technical analyst. So there are two reasons for thinking that 135 was the low. The first was the fact that we had this trend line, which you can see here on the daily, which has really been just a very strong trend line for a long time. I mean, we can even move it up a little bit because we had, if you want to put it here where it touches all of these, you would need this to be much lower, right? In fact, the area would be down here around 135. That's where I was looking for it. The second reason was because 135 was this 200-day exponential moving average. So first I'll deal with this 200-day because it's the easiest to see why I got it wrong. Look, since the COVID lows, the 200-day has never been touched, right? We got close a couple times, but never touched it. So looking back, you cannot assume something will happen if it does not have a history of happening in the past. Given the history, it would have made more sense if I had said that we want to be cognizant of the potential for the stock moving higher before it gets to this 135 level, as it did in the past. You can see it did not hit this 200 period moving average ever. In fact, it was a couple percent away from it every time, as it was this time, right? This trend line here is a little bit more difficult to reconcile, and the reason why is because, well, look, it touched very many tags. It was very easy to expect that that's how low it would go, which is again why you cannot be completely dependent on one signal in technical analysis. It's a weight of the evidence approach where you take a look at all the signals on various time frames. Now, we can also entertain the potential that this correction is not over and that Apple will get down to 135 again. But right now, that assessment is useless because it is not actionable. Furthermore, we would have to assume, after what looks like the end of this move, that if we were to go back down to 135, that a deeper correction is coming, and I don't want to address that at this point in this video. Overall, what I take away from this is that my assessment should have been more broad with relative potential outlines, and then when we get to those general areas, take a look at the lower level time frames for what material bullish potential would look like. And given that we got two bounces on this 138 level, right? Any third retracement to this level should have been a clear and obvious buy, especially if it was on higher momentum. I'm not going to get into that on the lower levels, the hourly, but it was. And it was obvious for market participants as well. That's why price rose. And again, this will go into the archive of bullish divergences to look at various divergent moves. So what now? Well, it looks like Apple has broken out of its downtrend on a nice divergence. So higher highs are likely, especially if we can just pop above this little level here. I think that that's very, very likely. Now in the immediate time frame, the current position is not one that is more attractive now than down here, right? So again, this goes back to my meat on the bone theory. From a relative basis, it would have been better to go long here than here. That's just a fact, right? This is a better entry point for the current rally. but also any subsequent rally that might happen in the stock. That said, I would not be surprised to see higher prices in Apple this week. When you have a divergence like this, generally you get follow through, right? But the setup at this time in the near term is not aligned with my own trade parameters, so I will likely just be watching Apple this week unless we get a nice sort of consolidation setup. Now, if we assume the downtrend is over, what would make sense is for Apple to continue higher until we get bearish potential, at least on the lower level time frames. Now, I will not go into that at this time. All I will say is that if you've been watching along with me, you know optimal entry generally requires a negative histogram on the MACD. We don't have that. So to go long here would be chasing this move and not entering on the ground floor. Again, this would be the ground floor because we could pop higher and then consolidate, or we could pop higher, come down, whatever the case might be. We want to get in on the ground floor when there's a lot of meat on the bone. So that's all I'll say with Apple right now. Thanks for watching, and remember to like this video if you found this reflective video informative, and watch the others that I've released today, then subscribe to my channel. Thanks so much, guys. I will see you tomorrow after the close.